Howdy out there, folks. It's your skipper here, Darius Dale, to present our macro minute for Friday, October 15th, 2022, starting with our economic release spotlight. So, the September retail sales data, which were no doubt distorted by Hurricane Ian, were marginally confirming of our resilient U.S. economy theme. From prior experience analyzing economic data around hurricanes, it's going to be another month or two before we can really observe any, confirm any change in trend. The current trend, the legacy trend, was very much still intact, of slowing. So headline retail sales slowed 410 basis points to 0.1% on a 3-month annualized rate of change basis. That's the lowest print we've seen since July of last year. Core retail sales, the retail sales control group, which feeds into GDP, slowed 280 basis points to a 3-month annualized growth rate of 3.8%. That's the lowest print we've seen since December 21. That obviously moving in the wrong direction if you're bullish here. But the thing is that tips your caps towards the bears is the fact that core retail sales growth is still elevated relative to its pre-COVID trend. So that 3.8 3-month annualized growth rate compares to a pre-COVID trend of around 3.4, 3.5. The fact that we're still elevated in a month where we had a major hurricane make landfall in a year with one of the most adverse sort of wealth effect shocks that we've ever seen on record is telling you that, hey, look, previous estimates of the neutral Fed funds rate and ultimately by extension, the terminal Fed funds rate may perhaps still be too low. So let that sink in and let that and sort of play that forward as it relates to the next, let's call it 3 to 4 months of risk management. Speaking of risk management, getting into my longbow dashboard here. So going down global macro, let's start with the dollar here. That is still bullish, kind of in the middle of its range. Gold, bearish, middle of the range there. 10-year treasury yield, that's still bullish in the middle of its range. S&P 500, that's bearish. Getting towards the upper boundary of the range, although you're getting a little bit more overbought signals towards the Russell. We'll get there in a second. VIX, VIX is still bullish. That's in the middle of the range. So a lot of stuff in the middle of the range, as you can see, not necessarily a good place to be pressing new longs or necessarily, establishing new short positions. You're either in the trade or you're not. Sometimes you missed a train, and the worst thing you can do is try to jump on the train after it's already left the station, because that's how you either get rolled over or get hit by the next train. So anyway, NASDAQ 100, that is bearish still in the middle of the range. Russell 2000, that's bearish. It's getting up there towards the upper boundary of its probable range. That's about 1757, 1758 there. So we definitely be concerned about that. What else? There's something else I want to flag on the Russell here, but that's eluding me this morning. Bitcoin, that's still bearish, getting towards the upper boundary of the range there. Ethereum still bearish in the middle of the range. Shanghai Composite still bearish in the middle of the range. Crude oil still bearish in the middle of the range, although it's got some bullish short-term price momentum. We'll see if that can extend, although the market really sniffed out that fake production cut of OPEC plus last week. Ag neutral in the middle of the range, and then industrial metals, that's bearish in terms of momentum in the middle of the range. And then shifting gears to my global macro dashboard where we sort. So there's 300 ETFs, about 300 ETFs here representing individual factor exposures across global macro. We sorted every morning for you by the odds, the worst odds, the best odds. So things that are most overbought relative, and then scroll at the bottom, we'll see things that are most oversold. And in terms of overbought signals this morning, you're getting an official overbought signal in CTA's Simplified Managed Futures ETF. This thing's been a rock star all year. Probably one of my worst trades all year is selling this thing. I don't want to say back in June or July. Wish I didn't, because this thing's just been rocking and rolling. It's been a great exposure, great product over there by our friends at Simplify. Let's look at scrolling down here a little bit. Let's see if there's anything oversold. Probably not, but we actually do. Coffee's still oversold here. That's bearish. So if you're short coffee, definitely be covering coffee. Or we can play for a bounce here. I mean, if we get a little bit more of a vanna trade into next week's OPEX, you're going to start to see all risk assets do reasonably well. 2-year treasuries, I see a lot of people making the rounds in terms of positioning for that trade. This thing's obviously bearish, and we've been in a bound bear market, but you're starting to get towards an overbought signal in 2-year treasuries as well. So just be aware of that. So just want to, when we get, you can also, by the way, this is one of my favorite features of this program. You can actually set an alert on, hey, does this thing, get to the bottom of its trading range, and then it'll email you or text you or whatever it need, however you have your alert set up to say, hey, look, signal, come by me now. So definitely, this is a very powerful platform. So very excited to be presenting that to our Team 42 audience. So with that, Darius Dale presenting our macro minute for Friday. It's Friday, October 14th. I think I got that wrong at the beginning there. So we'll make sure that's edited in the description. Cheers. Have a great day out there and have a great weekend. We'll catch you back here on Monday.